Hello. I'm getting this little spinning notification, so I believe I'm live. Hello. This is my first live video, so we're learning all the things over here about screen sharing and video sharing and what works and what doesn't work. And what you see on my screen now is the best I could come up with. So I'll give it a few minutes to see if anyone else hops on, and then we'll get started. So, but feel free to ask any questions in the comments as we go, and I will try to get to as many as I can. I am going to go ahead and get started. This is being recorded, so we will just repost it at a different time, and people can check it out later. So welcome to my webinar today. We're going to talk all about expense tracking and receipt storage. First, I'll introduce myself. My name is Kelly Wigington. I am a virtual bookkeeper. I've been bookkeeping for about 5 years now. I have an accounting degree from Tennessee Tech University, and I started my own business this past January 2021, and I strive to support small businesses and solopreneurs by giving them peace of mind that their books are kept right, whether I'm working alongside them and helping them to keep their own books, or if I'm doing it for them. But I know that keeping track of business ownership in general is just a stressful thing to do. And there's a lot of back office tasks that don't necessarily create any profit to do them, but they're necessary. And so bookkeeping is one of those things. And so that's why I'm here, to help people make sure that they're doing it right, or to help them and take that task off of their plate. So today we're going to talk about expense tracking and receipt storage, best practices, what's deductible, what's not, how to record your owner's pay and personal expenses, and some receipt storage tips and tricks. So for the most part, this is geared towards small businesses who are single member, whether you're an LLC or just a sole proprietor. Most of my deduction suggestions are going to be for those sole proprietor or partnership, basically a pass-through entity, where you're paying taxes with your personal tax return, and the entity itself is not responsible for taxes. So why track your expenses is what we're going to talk about first. First, obviously, to be able to see where your money is going, tracking your expenses is the easiest way to know where your money is going. A lot of new business owners, or not even new business owners, a lot of business owners judge how their company is doing by the number on the bank account balance, and that's just not an accurate representation of the health and well-being of your business, and it's also not a good indication of exactly where your money is going. So tracking those expenses and putting them all into categories is the best way to know where it's going and whether the places you're spending money are serving your business or not. It's also a good way to keep track of your deductions, and your deductions are important because your small business is going to be taxed on its overall profit. And so you individually will be taxed on your small business's overall profit. And the way to lower your tax liability is to have more deductions. And if you're not tracking your expenses and adequately saving your receipts, you might not get to deduct all those expenses, and you'll have a higher tax liability at the end of the year. And so that kind of molds in with to calculate your taxable profit. Knowing that profit number is essential if you're wanting to treat your business like a business instead of like a hobby. So you need to be tracking your expenses to know what that profit is. And then just to understand your company's overall well-being is one of the most important reasons to track your expenses. Is it gives you an idea of how you're doing, whether you're getting a return on any of the investments that you've made. So how do we track these expenses? First and foremost, I will always tell every small business owner ever, no matter how small your business is, no matter how much revenue you're making, or whether you're not making any money at this point, get a business bank account. Separate business and personal funds entirely. If you are a single member LLC or a partnership, technically, according to the IRS, all the funds in that business bank account belong to you. But for the sake of being able to see how your business is doing rather than how your household is doing, you want to keep those separate, and it will make tax time so much easier. So then once you've got all your business money in one place, you want to determine what categories will best reflect the way your business spends money. Do you spend money on advertising? Do you spend money on supplies? Do you spend money on office supplies like pens and pencils and computers and such? Anything that you're spending money on fits into some sort of category, and you really get to be the one who decides what the categories say, how you want to see that broken up. Do you want to see how much am I paying on all software, or do you want to break it down and say I'm spending X amount on this software and then I'm spending X amount on this kind of software? And you can break the buckets down really as small as you want them to be, but those are called categories in the accounting world, and you will categorize your expenses, and we'll talk about that. So when you track your expenses, you want to do so all in one place, whether that's in a software like QuickBooks Online, which I'm going to show you a little bit in a little bit. I'm going to show you what that would look like, or in a spreadsheet where everything is itemized in one place. And I'm going to show you what my DIY profit tracker looks like to give you an idea of kind of how you might format that, or if you're interested in mine. But keeping them all in a spreadsheet at the very least is a good way to put all of those expenses together so you can get a running total, because that's important. When you record your details, you record your expenses, you want to be as detailed as possible. You want to include the date of when you incurred the expense, who it went to, the payee, how much it was, what category, those buckets that we talked about, what category does it go into? You want to give a good memo or description, explain why you spent this money at Walmart, on Friday the 19th. Like, you want to have a good memo and description, and then it's always good to indicate, especially if you're in a at any time, you want to indicate what you paid with. So did you pay with your credit card account, or did you pay with your bank account, or did you pay for it with personal funds? And you either want to be reimbursed by your company, or you just want to consider that an investment in your company. Either way, you can deduct that expense. So you want to record that payment method as well. I always suggest that people reconcile their bank and credit card accounts regularly. And this is where using a software like QuickBooks Online will allow you to do that without having to pull out your calculator like you were taught in home ec, or some of us were taught in home ec how to reconcile a bank account. It's a little tedious, so having a software kind of do it for you is really helpful, but there are ways to reconcile your bank account if you're just using a spreadsheet. The point of reconciling, though, is to look at every single item on your bank statement and say, did I track that? And did I track it correctly? And so, again, that's kind of tedious, and that's where software is helpful. And then lastly, you want to keep and store your receipts. And I keep harping on this, and we'll talk. I'll show you some examples of how to do that in a minute. So let's look at some entry examples. I'm going to start in QuickBooks because I usually guide people to QuickBooks when they come and ask me questions about what do I need to be doing to keep track of my expenses. I will usually say, look into setting up a QuickBooks, unless you're really not making any money. But even then, you want to be able to record your losses. So here's what an expense transaction looks like in QuickBooks. you can say who you paid, and just like as an example, I'm going to use this on all of my platforms here. This beautiful painting behind me, I purchased the other day at the at-home store because we literally just had a dark wall behind me and I got tired of it. And this is an office expense because I have a home office, so I get to deduct that. So I'm going to say that I paid at home. It's a vendor I've used before. I paid for it with my checking account. I paid for it last Friday. Last Friday was the 8th. Like I said, I'm going to say that I I didn't use a credit card. I'm going to say I used cash because it's essentially a debit card is cash. I'm going to say that it's for office supplies. I've got office supplies and software. I consider that more like office supplies that I use. And then other office expense. And you can see here how I just chose those categories that I thought best explained to me how the money was spent. And then I'll say that it was for, office decor, new painting. And that was, I have this receipt. Hold on. That was for $109.49. $109.49. Okay? Now, mine's not associated with any customer, so I don't need to do that, but QuickBooks does allow you to track if your expenses were associated with a particular customer or even like a project. So that's really convenient to help you itemize your cost of goods sold based on each individual project or customer. So that's kind of just like a nice feature to have here. So I'm going to hit save and close here, and that will put that on to my books. Now you're also going to see on QuickBooks Online, this is what is called the banking screen. Every transaction that comes in from my bank account comes to this screen first, and then once I categorize it, it goes to the books. So I know if something hasn't been categorized because it shows up in the screen, which is pretty convenient. And here you can see where this came up in my bank feed. It found a match from one where I just entered it. And also, it found the match from where I just entered it. But later I'll show you how it will also find the receipt that I saved to it. So once I hit match, then it has been matched to my books and put on my books. So that's one example of how you might track an expense in QuickBooks. And you can take all of those expenses and run a report, and you can see them broken down into categories. You can see them listed out with all the details. There's a lot of different ways you can run reports there, so that's pretty convenient too. So another way, I'm going to give you a little demo of my profit tracker here. There's the front screen. We're going to go to October, which will be blank, but you'll see there's income. And here's my expenses. We'll go ahead and zoom in so you can see it a little better. But this might be what it looks like. This doesn't have to be what it looks like if you are using a spreadsheet, but this is the way that makes sense to me, and I formatted my profit tracker like this. And so I would do basically the same thing. 10/8/21. It was for office expenses is one of the categories I've got in there. The amount was $109.49, I think. The vendor was at home, and the details were office decor, new painting. Now you'll see that there's no place here for accounts. It didn't make sense to put it in this spreadsheet really, so I'm going to list in my details that I paid with debit. And then I'll be able to see that up here the next time I click on it. Now I do have a spot for a link, and so in a minute we will look and see how you can actually put a link to your receipts here as a good way to save them into a spreadsheet and have them all in one place. All right, let's see here. So the basic accounting equation to find your profit is income minus expenses equal profit. But I think from an accountant's standpoint, that should be verified income minus deductible expenses equals taxable profit. Because not all that money coming out of your bank account is a deductible expense. When you pay yourself, you don't deduct that. When you pay taxes, you can't deduct that. When you go get a coffee and pay for it with your business card, even if you're on your way to work, you can't deduct that. So it's important to know what your deductible expenses are, because that's what calculates your taxable profit. That taxable profit is important because the higher that is, the higher your tax liability is going to be, and the lower it is, the lower your tax liability is going to be. But also, I mean, obviously the point is to have a higher profit, because that's the money that you could choose to get to keep or reinvest into your business for growth. And then I put verified income here just because it's important. This just continues to hit home on the importance of keeping your business income separate from your household income. Because if you can't verify that income was for business purposes or for that business, if it's commingled too much, then it's hard to report. So it's just good to have all that income coming into one place so that you can verify it with a bank statement and you're not overstating your income at the end of the year. We're understating either. Let's see here. So here's some deductible versus non-deductible expenses. The list here could go on. And again, this is where buckets can be broken down even further. But these are some examples of, both sides are examples of categories you might use, but these are the deductible categories, and these would be non-deductible categories. So you've got advertising and marketing, business meals. I put an asterisk because business meals are usually 50% deductible. And a business meal is any meal where an employee or owner of the company is there, and you're also meeting with another employee, a vendor, a client, or any other contact that might apply to your business, and the business was discussed. Building relationship with a client can be considered a business meal. But business meals are not just, I decided to go out for lunch today while I was working. A business meal could be feeding your crew because they don't get to leave the job site to go get something to eat. So anyways, most years it's 50% deductible. For 2021 and 2022, in order to try to encourage people to eat out of restaurants, which are struggling right now due to COVID, business meals are 100% deductible. Insurance, bank interest and bank fees, business use of car and mileage. This one also has an asterisk because there are two ways to calculate your deduction for business use of your vehicle. The standard mileage method is the one I would always suggest. I will show you here. This is also in my profit tracker. You want to track your date, where you went, how many miles driven. And if I drove 20 miles today to go somewhere, then this would actually just calculate for you that that's a deduction of $11.20. So this is important for you to track because it's an excellent deduction. Other ways to track it would be to keep track of all your vehicle expenses and then try to determine what percentage of use of your vehicle was just for business, and that's a little bit trickier to calculate. If you have a company car that is used exclusively for business, you can deduct all of those vehicle expenses, assuming you really don't use it for personal reasons. But you cannot use both deductions. So if you're going to deduct all of your vehicle expenses for that company vehicle, you cannot also deduct the mileage on another vehicle. It has to be one or the other. So let's see here. Contract labor, education and development, home office is got an asterisk because office supplies are all deductible. If you have a home office, you can deduct portions of like your mortgage and your property taxes and such, but that is a calculation that you will want to have your CPA do for you to make sure that it is accurate. Legal and professional fees, movement expenses, rent expenses, salaries and benefits, phone and internet, travel expenses, job supplies, shipping supplies. I should have put an asterisk next to salaries and benefits. This is employee salaries and benefits. Unless you have become a corporation, an S Corp or a C Corp, you're not on salary. And so if you choose to do your health care through your company's business account, that's perfectly fine. It's considered an owner's draw. It's not deductible. And so that's where I've got over here. Maybe I didn't put the insurance over here, but like personal insurance that at another company might be deductible for them if you're an employee. If you are the owner and you're not on payroll, then your benefits are all owner's draw. They're not deductible benefits. Now, they might be deductible on your personal tax return when you file it, but they're not going to be deductible to your business. Let's see here. So other non-deductible items would be personal meals, personal expenses of any kind, charitable contributions. Now that's another thing that when you file your personal taxes, you can itemize that as a personal deduction, but it's not a business deduction. That does not lower your company's profit if your company makes a charitable contribution. But you can deduct your company's charitable contribution on your personal tax return. So that's important to know. Vehicle expenses we've already discussed. Tax payments, when you pay those quarterly taxes or your tax bill at the end of the year, that is not a deductible expense. That is an owner's draw. Childcare is an owner's draw. Penalties and fines, if you have like an overdraft fee, those are typically not deductible. Clothing for work is typically not deductible unless it's considered ordinary or necessary for your business. If you're having to buy steel-toed boots in order to do construction, I'd consider that ordinary and necessary. Also something you want to talk to your tax preparer about though, because they'll be able to identify whether or not that's ordinary and necessary for your industry. Entertainment is not ever deductible. It is always listed as a line item on any chart of accounts I've ever seen. I always see entertainment, and that always boggles my mind because you can't deduct that. So basically anything that's not ordinary, which means common, or necessary for your business operations, you cannot deduct. So let's talk a little bit more about owner's draw, because anything that's not a deductible expense, you can record it however you want. For instance, if I pay for gas with my business account, like I'm going to put that in a gas expense bucket. But I know that at the end of the year, that's actually not going to lower my taxable profit. And so at the end of the year, I will likely make a journal entry to code all of those tax expenses to owner's draw. But I just like to be able to visually see if I've paid for gas out of my business account, and if so, how much did I spend? So, but anything. Owner's draw is also known as owner's pay, owner's equity. Sometimes it says owner's pay and personal expenses, owner's distribution, shareholders distribution, or an equity distribution. You can use any of these when you're recording an expense on your books that's not deductible. You can use any of these to explain that it's an owner's draw. Now that's another choice, is you can kind of do a subcategory. Like, this is my owner's draw account, but the subcategory is life insurance. You can do it that way. So these owner's draws include checks or transfers to yourself. If you're paying yourself a legitimate paycheck, that is considered an owner's draw when you withdraw those funds. Personal expenses made from business funds. I don't ever recommend doing this because it is a pain to identify what is personal and what's business as a bookkeeper when I'm not the one spending the money. But if you were to do that, if you were to pay for a personal expense from your business fund, that is an owner's draw. When you make tax payments, I already said that. And then any non-payroll benefits. If you're not on payroll and you're paying your benefits out of your company's account, again, perfectly legal, totally fine. It's part of your draw. This also includes I didn't put this here, but if you have a vehicle that you're using primarily for business, but you own it, then those vehicle expenses that you might be paying for your vehicle's oil changes and gas and tires and all that out of your company's account. But if you plan on taking that standard mileage method, which usually gets you the best deduction, then all of those expenses are draws, or owner's draws. So all non-deductible expenses are technically owner's draws. You don't necessarily have to code them that way, but that's how it's going to appear when you are filing your taxes. So we'll go to our receipt storage portion, because this seemed to be what got the most interest when I posted on Instagram about how to store your receipts. So bank statements, this is a common misconception. If you get audited and they say we need to see all of your income and expenses, handing them a bank statement tells them nothing. Because generally what comes in on a bank account or a bank statement is like, yeah, you can see that I paid for money at Walmart, but then it's just like the description on the bank account or bank statement line is just a series of jumbled up numbers and letters. That tells them nothing. Did you buy groceries or did you buy pencils? Like, they don't know. So it's really important to keep your receipts, and this is where I'm going to show you some hacks. So I, a second ago, pulled up this at-home receipt that showed you that it was the $109.49 for this picture behind me. I saved that into my Google. Oh no, I haven't. We need to save it in my Google Drive. I've got January through September already listed here. So we're going to make a new folder, and this is what I would suggest. If you want to keep your expenses on your desktop, that's fine, but I like putting them in Google Drive, keeping my receipts in Google Drive, because then I can take a picture of it and save it on my phone in my Google Drive folder. Super convenient. So we'll make an October 2021 folder. I'm going to open it, and I'm going to upload a file, my receipts, and we'll go to, I saved it right here. And once that uploads, you can actually right-click, click Get a Link, copy your link, go back to, I'm going to go back to that expense that I put here on my profit tracker. Oh my goodness, I clicked on December. Let's see here. And if I go over to where I can put a link, I will paste it here. And then if I ever need to find that receipt again, I can honestly just hover over it, but you can see where clicking on the link will take me right to my receipt. You can do that from your phone, you can do that from your computer, but then everything is in one place. And if you ever need to submit your whole year's worth of receipts, then, I mean, look, you've got it all organized right here. You can just submit this. So just that, to me, that's the easiest way to keep them electronically. Some people still want to use envelopes. Like, go for it, but make sure you've got your dates on here and sort them. Don't just put all of your envelopes or all of your receipts for the year in one envelope, because your tax preparer and auditor will hate you. So the other way that I wanted to show you is if you get a QuickBooks subscription, they have this handy little receipts tab, and you can either upload receipts straight from your computer. If QuickBooks Online has an app on your phone, so I can snap a picture and save it to my receipts from my phone. Or I can forward, because a lot of receipts at this point come in my email. Like all of my Calendly and Canva and QuickBooks and all those receipts come into my email. I can forward them to my QuickBooks account, and you can see where I forwarded this at-home receipt from my email directly to QuickBooks, and it went ahead and it's found the expense that it came to, and I can match it. So then when I go back to that expense in my books, then I can click on it and pull up that receipt super easily. So this is, you can see where I forwarded several of my receipts here, and it has found my matches for me. Now, sometimes it hasn't, like this one I paid out of personal funds and I have not paid myself back. So I will have to I'll probably just make a journal entry here. But you can see where that is a super handy tool for either you or your bookkeeper. So let's go back over here and make sure I'm not missing anything. Does anybody have any questions? Because this is really my ending where, overall, just record keeping is key. It tends to, like I said, go on the back burner because you don't make any money by taking care of your books. It doesn't feel like it. But making sure that every expense is categorized and if it's deducted or if it's deductible, if it gets deducted, then that saves you a lot of money in taxes. And so it is worth the time or the investment in somebody else to do it, to save you the tax bill, to save you from having a tax preparer a tax preparer might have to come in and do all the work for you at a much higher cost than if you were to just keep up with it or someone else were to keep up with it. And also, what was I going to say there? And also, if you ever get audited, this is something that other people, small business owners often don't know this. If you get audited, you pay for the auditor, even if, nobody wants to be audited, but you pay for your own auditor who's assigned to you. So you pay that bill, and then they have to find everything. You still have to provide all the documentation that you haven't been keeping up with or you have been keeping up with. And so if it's already done, that makes it so much easier and cheaper. It is expensive to not keep track of your business expenses. So if you have any questions, feel free to reach out to me, send me an email, send me a DM. Thanks for sticking with me for the whole half hour, but I appreciate Courtney, you hopped on, and anyone else who's been in and out. Thank you so much for dropping by. And here's some information on how to get in touch with me if you want to. I also, if you go to my website, I've got a calendar link in there if you want to book a 15-minute discovery call that's totally free. We can talk about your books and how you should be handling them, or we can talk about how I can be handling them. But definitely book a call with me if you have any questions you'd like to hash out. And I look forward to seeing you on Thursday, where we will talk, instead of about expenses, we'll talk about profit and why profit matters. So we will talk to you then. Bye.